Welcome back. Kenyans will have to tighten their belts even more following the gazettement of the Finance Bill 2024. The bill has proposed a 16% VAT on bread, with a 400 gram of loaf set to rise by at least 10 shillings under the bill. The bill further proposes that vehicle owners will pay a new annual motor vehicle tax at the rate of 2.5% of the value of the car at a minimum of 5,000 shillings and a maximum of 100,000 shillings. Our reporter Abdi Aziz Hashim went through the 135-page document and files this report.
Kenyans will have to dig deep into their pockets if the latest gazettement of the Finance Bill 2024 is anything to go by. The 135-page document has proposed a raft of measures geared towards broadening the tax base and raising the revenue to meet the government's plans in the next financial year of 2024-2025. Among the proposed areas that has elicited mixed reactions, both on and offline, is the latest 16% VAT on bread, with 400 gram of loaf set to rise by at least 10 shillings under the new law. Treasury has proposed the removal of ordinary bread from the list of zero-rated supplies, a VAT exemption list. Others who will feel the pinch of the new law are vehicle owners who will start paying an annual tax of up to 100,000 Kenya shillings, depending on the value of their cars, if Parliament endorses the proposals that is set to increase motoring costs amidst the costly fuel and spare parts. The bill proposed the introduction of a 2.5% annual tax on the value of vehicles, with a deduction set at a minimum of 5,000 Kenya shillings and a maximum of 100,000 Kenya shillings. The deduction, called motor vehicle tax, will be paid on each vehicle at the time of issuing an insurance cover. Moreover, imported motorcycles costing 130,000 Kenya shillings and above are set to become more expensive after the Treasury proposed to raise excise duty on a two-tier system featuring the current flat rate of 12,952 shillings or a new proposed rate of 10% of the unit's value. This move, if adopted by the members of Parliament, is likely to affect most motorcycles with an engine capacity of 100cc or more and in turn push them out of reach of many Kenyans. Elsewhere, gamblers will pay the government 20 shillings for every 100 shillings staked after the Treasury proposed to increase excise tax on betting stakes to 20% from the current 12.5%. Excise duty on fees for mobile money transfer services like M-Pesa and money transfer charges in bank circles now rises from 15 to 20%. The cost of financial services such as the issuance of credit and debit cards, forex transactions, and processing of checks to attract 16% VAT. And finally, it is a win for beer lovers as Treasury proposes to cut excise duty on a 500 ml bottle of beer with 4.2% alcohol content from 71 shillings and 22 cents to 47 shillings and 25 cents. The push to increase VAT on essential commodities comes in the backdrop of poor revenue collection by the Kenya Revenue Authority KRA, which has been, despite recently introduced tax and administrative measures in the 2023 Finance Act, whose implementation began in July last year, failed to meet its targets. According to the latest figures from the Exchequer, total revenue collected through the 9 months of the 2023-2024 financial year, which runs from June 30th, trailed the target by 270 billion shillings as of the end of March 2024. The poor performance by the tax collector has resulted in the National Treasury trimming both its revenue and expenditure targets, including the new 2024-2025 fiscal year. The bill is expected to be adopted by Cabinet and tabled in Parliament for debate and approval before the end of June. Abdi Aziz Hashim for Legends Edition.